Hello everyone, welcome to another Stock Valley video. Today, we have to talk about a stock that has absolutely broken the hearts of many investors over the past year, but might just be setting up for one of the biggest reversal plays in the market right now, Snap. Stock, is the massive 50% crash finally over, or is this just another trap? Before we dive deep into the charts and the critical levels you need to watch, we have to understand the fundamental story. Why is Snap suddenly seeing signs of life? 2 words, TikTok and AI. Right now, the regulatory environment around TikTok is incredibly uncertain here in the US. Because of this massive risk, major advertisers and brands are starting to diversify their ad budgets. They are looking for alternatives, and Snap is sitting right there, ready to capture that market share. On top of that, Snap hasn't just been sitting still. They have been aggressively rolling out new AI-powered advertising tools. These machine learning models are drastically improving the return on investment ROI for advertisers on the platform. So, we have a fundamental catalyst, a potential influx of ad revenue. But does the chart agree with this bullish narrative? Let's get into the technical analysis. In our previous analysis, we mentioned that Snap was in a brutal downtrend. And it was. The selling pressure was relentless. The price dropped all the way down to a low of $3.75. Think about that for a second. The level of capitulation we saw to reach $3.75 washed out almost all the weak hands. But from that exact level, we are now seeing real signs of a recovery attempt. In our earlier analysis, we specifically warned you guys that the $4.66 and $5.47 levels were very important, and look at how the price action respected those exact zones. We consolidated, built a base, and started pushing higher. This wasn't just random volatility. This was a structured, technical bounce off extreme oversold conditions. And as of now, the stock is fighting a major battle. It is trying to move and close confidently above the 50-day moving average. As technical traders, we know the 50-day MA is the first major line in the sand for short-term institutional momentum. If Snap can flip this 50-day MA from resistance into support, the bulls are officially back in control for the short term. Now, let's say this upward movement continues. Let's say the AI news and the TikTok ad revenue shift push this higher. The next major, heavy resistance zone we will be facing is right between $6.89 and $7.28. Mark these numbers on your charts right now. This is the danger zone. Why is this specific level so important? Let's look left on the chart. Because between February 2025 and January 2026, for nearly a full year, the $6.89 to $7.28 range acted as a massive, strong support zone. Every time the stock dropped into this box, buyers stepped in. It was a fortress. However, as we all know, in the first week of February, the narrative completely broke down. The stock didn't just break below this support, it completely collapsed with a massive 25% decline, leaving a huge gap behind. When a support level that strong breaks, it instantly becomes a massive wall of resistance. Since then, all price action has continued below this level. All those people who bought between $6.89 and $7.28 are trapped, waiting to sell at break-even. We have to be realistic here. Looking at the bigger picture, on the weekly chart, the price is still trading heavily below the major, longer-term moving averages. The macro trend is still technically bearish. We are fighting gravity. If we zoom back into the daily chart, we can see exactly how hard this fight is. The levels tested in mid-April were challenged with decent volume, but they were not broken. The sellers defended their territory. Now, after a nearly 50% drop from its highs, the stock has gathered enough energy and is once again trying to reclaim those lost levels. So, this brings us to the ultimate, key question for Snap right now. Will this short-term upward trend, fueled by ad revenue speculation, actually continue and break the $7 resistance, or will we see a harsh rejection from the incoming 100-day moving average, creating a lower high? and resulting in a possible painful retest of the $5.47 support level. This is a classic make or break setup. If you are trading Snap, you have your levels. Manage your risk tightly and don't let FOMO dictate your entries. If you'd like to stay updated on critical setups and stocks like this, make sure to hit that subscribe button to join the Stock Valley channel. We cover these event-driven technical setups every single week. And I want to hear from you. Are you buying this Snap recovery, or are you shorting the moving averages? Share your strategy and your questions in the comments down below. If you enjoyed this deep dive analysis, please don't forget to smash the like button. It really helps the channel grow. Wishing you all profitable trades, and I'll see you in the next video.